Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel dedicated mostly to the top-down analysis of different financial securities. And today we're going to be looking at a Deriv synthetic index crash 1000 index. So for those of us that are into the trading of Deriv synthetic indices, I believe this analysis session will help you. So as you all know, for those that have been following me for some time now, I do my top-down analysis using pure price action trading strategy, where we work our way down from the higher time frame to the much lower time frame with the hope of getting profitable trading opportunities. So without wasting much time, let's get to it. Currently on my chart, I'm on the monthly time frame, and from what we can see on this time frame, we can see that the market has been making a series of lower lows and lower highs for quite some time now. However, one thing that we try to do on this particular time frame, the monthly time frame, is to get our directional bias. So it would have been so simple to look at this and say that, oh, our direction is downwards, which wouldn't have been a wild guess. But if we were to pay a closer attention to the chart, you can see that the market made a lower low, lower high, lower low, lower high, lower low, lower high, lower low. At this point, the market tried to form like to take out this initial lower low, but ended up coming downwards to form a double bottom. So it formed a double bottom, but this bottom couldn't push up enough to take out this lower high. So the market broke beneath the bottom, broke the bottom and ended up forming a lower low. The market currently retraced upwards to form a lower high. So even though these meet our criteria of a downtrending market, one thing I'd like to bring to our notice, because we're on the monthly time frame, is that very, very strong support stone resistance zone has just been taken out. So what do I mean? In the last trading month of August, the buyers were able to push price upwards such that they took out a very, very strong key zone with price closing above this support zone. However, since the beginning of the month, sellers have been trying to push price backwards, but downwards, however, into the resistance on support zone. What am I saying? This would in turn affect where we think the price is headed. Why? Because we can see currently that price is resting on a very strong support zone, and what support does is that it pushes price upwards. Also, to add to this our bias, I can include a trend line here. This was invalidated, so if I shift it here, you can see that major trend line on the monthly time frame has just been broken. So these two confluence would try to tell me that the market is pushing upwards. Now, this doesn't automatically mean that the market is now in an uptrend. So we've been able to get our bias from the monthly time frame. What do we do next? It will be to go to the weekly time frame or the next lower time frame, which is the weekly time frame, to get structure of the market which we can work with. So on the weekly time frame, what structure is the market presenting before us? Now, if we look closely, this, for those of us that are experienced when it comes to analyzing the market, we can see that this jumps out almost immediately to us, and this structure is the inverse head and shoulder pattern. So let me map this out for those of us that do not know. This would be the left shoulder, this will be the head, and then this will be the right shoulder. And as we all know, the inverse head and shoulder pattern is a bullish reversal pattern. So what it means is that it's a bullish reversal chart pattern. So what it means is that when price is in the downwards direction, when this pattern shows up, it's an indication that there's a strong probability of price reversing from this downwards direction and heading to the upwards direction. So this further supports our initial take from the monthly time frame that price would likely head upwards. So having these two from the higher time frames, the best thing to now do would be to go to the daily time frame. Now on the daily time frame, what we try to achieve is to look for the tradable trend of the market, the most recent trend of the market. So I call it the tradable time frame. So that's where we get what the market is doing most recently, in the sense that we always like to flow with the trend. So if on the daily time frame we have an uptrending market, so that means we look for buying opportunities. And if we have a downtrending market, then we have to look for what? Selling opportunities. However, our two previous higher time frames have pointed to the fact that we should be looking for what? Buying opportunities. So we have an inverse head and shoulder pattern. So on the daily time frame, we can see that the market is trending upward. So we have a higher high, higher low, higher high, higher low, a higher high. The market ranged a bit from the higher low, a higher high, higher low, and the market currently has just retraced. In other words, the market formed a higher high. We have a retracement into our strong support zone all the way from what? The monthly time frame. And that support zone happened to form what? The neckline of our inverse head and shoulder pattern. So we can see that everything has aligned thus far from even the monthly time frame down to the daily time frame. So for those that have been following me also, you know that I use three basic tools for my analysis: the trend line, support and resistance, as well as the Fibonacci retracement tool. Now, since on the daily time frame we can see that we have what? An uptrend, which is which would be, if we are to look for any opportunity at all, it has to be what? Buying opportunity. So having this, then I can even include an internal trend line to cater for the most recent highs and lows of the market. So if I have this in, then I wouldn't be needing this. I would not be needing this for now. So let's zoom in to see it properly. So can make an adjustment. So the market has made like 3 touches of the trend line, 1, 2, 3, and it has formed a high and made a retracement. So all we now need to do, and the retracement is into our key zone all the way from the monthly time frame. So the next best thing would be for me to include my Fib tool, which will be from the swing low to swing high. And for those also that have been following my style of analysis, there's what I call the Fibonacci retracement to golden zone, which is the zone between the 50% and 61.8% mark. And we can see that price is currently in there. So even if I were to do like an adjustment of this neckline, we'll see that it clearly tallies with what? The Fib golden zone. How do I mean? If I move this upwards a bit, we'll see that it clearly aligns with our Fibonacci retracement golden zone. So this gives me even more confidence on the confluence that I've been able to put together. So let me zoom in for us to see this properly. So we can see our inverse head and shoulder pattern. We can see our support, our resistance zone that now turns support zone from the monthly time frame, or our support zone from the monthly time frame. So we can see our Fibonacci retracement to the golden zone, and price is currently in there. So what do we do next? How do we take advantage of this setup? All we need to do will be to go to the much lower time frames to look for our entry opportunities. So if our entry criteria is met or are met, then we can now jump into the trade. So if I go down to the H4 time frame, so I can see that on the H4 time frame, if I go to the line chart, I can see that there's a double bottom already formed in our strong key zone. A double bottom is also a strong bullish reversal pattern. I've talked about double bottom severally on this channel, so you can check my other videos to know more about it. So however, this double bottom is a strong indication that our price is the price of the market is really ready to go upwards. Another entry criterion that we use is what? A counter trend line. So if I include my counter trend line here, we can see that the counter trend line has not just only been broken, it has been retested. So I'm currently on this trade actually. So, and if you're coming across this, I'll tell you that this is a very, very viable trading opportunity. So if you are lucky to come across this video while this trade is still here, or while the price of the market is still here, it will be the best time to jump in. And of course, this holds a very high risk to reward, where my stop losses are here, and this is where I have my take profit. So you can see the distance between our entry and our take profit and our stop loss. So this is what I hope would be a very, very profitable trade. If you're opportune to see this, you can jump in. Let's make some money together. So like I always say, this is a trading academy channel. If you want to learn how to analyze the market skillfully like this, you can always reach out to us via the link on my YouTube bio, as well as the contact details there. Also, if you do not have a Deriv synthetic indices account and you want to try out some of this Deriv synthetic pairs, which are very, very profitable, you can use the link attached to this video to register. Thank you for stopping by my channel, and super shout out to those that have been supporting this channel all the while. I am very, very grateful. Do enjoy the rest of your day and have a fruitful trading week. Cheers. Hold on.